Hi, welcome to this video day, which is on Sunday, July the 15th. We're looking at two trade setups. They're going to be Euro USD, Euro CHF. We'll go to the charts in a moment. Now, just for new viewers, we are going to be using very simple technical analysis. We're only going to be focusing on big levels that matter to key institutions in the market, and to find those levels, we're going to be using our favourite tool in Forex trading, the COT, the Commitment of Traders Report. If you don't know what it is, it's a fantastic tool for detecting high odds entries and just projecting how far a move might go. If you want to find out more about it, you can watch an explanatory video beneath this one. Just want to watch the video through right now. Just keep in mind what we always want to do is trade with smart money commercial hedgers when their positions diverge significantly away from speculators. Now, we're going to go to the charts, but do keep in mind it is my view as of right now. It can change in line with the market conditions. If you want all our trading techniques, our COT analysis and our daily technical analysis of 14 major Forex pairs, you can click on the link beneath this video. All right, let's go to the charts. I'm going to start with Euro USD, COT net traders positions first. On COT net traders positions, just very quickly before we go to another chart and draw our levels. Commercials in red, hedgers, smart money, large speculators in green. And just for new viewers, became interested in this trade here. Record net long, speculative position, big commercial short position against them. There was almost another record net long here and a big commercial short position, and forced its way up here above the 125 level, came back, had another go. These peaks can't take out those. Comes down, then the specs build up the record net long. It's very laboured. You can see these candles here, they're struggling to get higher to these, and we just think it's going to sell off. So we go short through 124, 123.50, and down we come. But what you can see now is obviously the speculators get hit on stop. Commercials naturally lighten their hedges. This week, specs have dropped down below 50,000, commercials 50,000. What is this telling us? Just telling us basically we're in a range, okay, which you probably guessed. So you got a range, about 118.50, you can say about 115 really. Okay, so you're getting this consolidation, which you very often get after a big move. And which way are we going to go now? In terms of consolidation, you want to always be careful. You don't be caught in a non-moving market, but you will, I think, get what I call an impact event, which is going to send the euro down, okay? And you've also got what I call a high definition candle in the consolidation, which will help you in terms of getting trading entries and also setting your stop. So let's go and move to another chart and draw some levels. All right, we'll draw some levels in a moment on the chart, but just first of all, let's have a look at the fundamentals. What we know is that both groups at the moment not really got big positions on. We're in a period of consolidation. The groups will move once we break consolidation. But in terms of which way are we going to go, okay? I personally think any euro upside is pretty limited. Euro downside, there's a lot of it, okay? Now, I'll just draw the levels on the chart at the moment. Just go through these 3 points here. Interest rates. We've got a vague end to stimulus by the ECB. Okay, what I mean by that is at their last meeting they said, we'll probably end it by the end of the year, but we might not. And if we need to, we might extend it or add to it. Just very, very vague. They're vague about interest rate rises as well. They said, one might come in the summer of 2019. But it might not. Depends on the economic conditions. That's a year away at best, okay? So the best is you're going to see an interest rate hike summer 2019 and stimulus end by the end of the year. But if you look over in the US already has an interest rate advantage over the euro, and it's going to get better. Because how many times is the US going to raise rates by the summer of 2019? I put 3. That is very conservative. I think it could be 4. Maybe 5. I know they're only little rate hikes, but they are widening that interest rate differential. And it's very, very important, as we know in currencies. So I don't really see any euro upside. or big upside. Obviously, I could be proved wrong, but I just feel that differential just so important. I think the impact event could send the euro down is obviously trade wars. I think they're coming for Eurozone. I did a video at the weekend on this, and if you look at Trump, he's already said, yeah, the Eurozone trade surplus with the US is a disgrace. It's horrible. It is ending. If it doesn't come down dramatically, there's a price to pay, and Europe knows what that price is. And I put a potential 150 billion of tariffs. Now, I put that number down. It hasn't actually been said by Trump. But if you look at what he's doing with China, he's put 30 billion on, threatening another 300 billion. You add those two numbers together, you get the size of the Chinese trade surplus. He'll do the same to Europe. He'll just hit them with tariffs the size of their surplus. That really will send the euro down hard if it happens. Okay, and I think there's a high probability of it happening because Eurozone have a real problem. They all have to agree when they go to talks, and they're not far away. July the 25th, to go to Washington and explain how they're going to reduce the trade surplus. Coming up with a united front in Eurozone is very, very hard because all countries have to agree. It's not like you do a vote, okay? Everyone has to agree. They are not going to get something in place to satisfy Donald Trump, in our view. You actually watched that video on trade wars as well. There's a little bit more background. But what else have you got? Political problems in the zone. The migration problem. They said they were going to agree how to deal with that and deal with it decisively. They ended up not really doing anything at all. The problem is still there. Also, high unemployment, lackluster growth. Germany isn't doing very well. If it gets hit by tariffs, that would be a real blow to Germany. So yeah, US is in better shape. Interest rates, differential favour of the US dollar, and the US will win a trade war just simply because of the size of the economy. The Eurozone can't do as much back to the US as the US can do to the Eurozone. Okay, so from our perspective, we do have the range. Okay, so it's 118. If I can draw my line straight, my mouse. There we go. It's really the top of the range. Then the bottom of the range, you've got some candle bodies there. I would go with these tails because they're right near another round number. So just above the 115 level. There's the range. I don't feel we're going to break decisively out of the range. And I'd call this a high impact candle here, which is at the top of the range. That's the ECB candle. Market was enthusiastic about the ECB being hawkish on rates. They pushed it slightly through, and then it came down again. This candle here needs to be decisively taken out with a close for me to change my bearish view. And I just think rallies will fade back to 118, okay? You've got one here, comes up, fades back. Okay, we're coming back up a bit now, but we're in a range, okay? So I would, yeah, if you wanted to, just sell back to the top of the range. Yeah, on confirmation, stick your stop back there and see if we come to the bottom range. I think, yeah, the odds favour us coming down to the bottom and breaking the range. I wouldn't do a big position when we got consolidation. You've really only got 300 pips between the two lines, but upside limited, downside for us is a lot. I think if we get decisively through 115, we'll go down to 112, 108, then 104. Yeah, you've had obviously a nice big move down. And it's common to get consolidation, then you get a break either way. I think it's going to be a break to the downside. I just did note that record net long position we saw on the COT net traders. You can see how small the candles were and how the momentum kind of dropped here, okay? Just as an illustration for new viewers. Then we're off to the downside. Okay, so for me, the euro, yeah, well, obviously I'm saying it's going down, aren't I? I just don't think got much upside. If we did get above 118 and closed above that big red candle tail, I would just go neutral on this one and reassess. But for now, remain bearish. Right, let's go and look at the Euro CHF. Now, in terms of Euro CHF, I'm saying COT net traders not really telling us too much in Euro USD. They're telling us a lot more in Euro CHF. So let's go and take COT net traders positions for Euro CHF, and regular viewers will be familiar with this spreadsheet. Just for new viewers, you only get the data from the CFTC for the majors. Okay, so to get the crosses, we have to work out what the groups have got in both majors and make up the cross. So Euro USD. Here are the non-commercial speculators. What have they got? We're just doing a simple ratio, 1.2 to 1 in terms of longs over shorts. Commercials 1.1 to 1 in terms of shorts over longs. The groups oppose each other, so divergence 2.3. Swiss franc, non-commercials speculators 5.8 to 1. Shorts over longs. Commercials 5.7 to 1. Longs over shorts. So you've got 11.5 here, 2.3 here. So you've got 13.8, and here it is in the spreadsheet. And you can see 7 to 1. In terms of longs over shorts, 6.8 to 1, shorts over longs for the cross. So it's a pretty simple way of doing it. We found it very effective over the years. Different divergences mean different things in different pairs. Some pairs will get very extreme, some won't get so extreme, etc. But 13.8 is a decent divergence in terms of this pair. And anything above 10 is normally pretty good. So let's go and take a look at the chart and draw some levels of entry, stop and target. Right, we're on the chart of the Euro CHF daily. Now, just in terms of the fundamentals very quickly for the Swiss franc, we've obviously already seen the Euro fundamentals. Trade wars have less impact on the CHF than any other major currency. Very insulated. Switzerland from trade wars. So that's a positive for us because obviously we're expecting trade wars to escalate. No big interest rate differential at present between the pairs, so that doesn't really come into play. CHF is a safe haven currency. It'll gain obviously on trade wars or any other risk off. Also, we know the commercials are coming in, selling the euro heavily and buying the Swiss. They're at 13.8 as we saw from the spreadsheet. Up here they're at 14s, okay, or at 14 as a divergence. And we wanted to sell, and we got a really good short trade there. It's a 500 pip drop. We got about 450 pips of that, okay. And when you get the divergences, you tend to get big breaks, okay, in favour of the commercials. We did try to short her again, tried to do it off the 20-day moving average. I thought follow through. She came up and stopped us out. All right, we've let her run on. Now we want to get back in again. Now, in terms of the way I view this rally, it's on borrowed time, but obviously it's looking pretty firm. We've got a nice big blue here with the candle tail here and finishing nice and strong. So we don't want to jump too soon. Where is the first level of resistance? Draw it here and I'll explain why. Okay, so what you do is you have a strong rise here, then it gets rejected, sideways, rejection, down a little bit. Then you come through on that bigger blue, then basically sits on the level a few times, 5 times, then pushes off. And on the way down, you see it blue trying to get back up through and fail. That level there is important to institutions, okay? So how would you play it? Well, if she came up through 117, just don't do anything. Just sell her right back through the round number, okay? Round numbers are important. If she can't get through 117.50, come back through 117. If she overran 117.50, then you've got, in my view, very firm resistance at 118, which is a round number, okay? So if you came through, just sell her back through the level, okay? Simple as that. Then put your stop back here. Very often do this. You don't want to jump too early. Very often move our levels and chase it, so to speak. But that's to get, you know, a decent entry. We also know that here, this is important to institutions. This is a key hedging level as well. The commercials will really sell into that. Okay, so for us, the rally, you could wait, see if that's tested, come back through. She jumped above, come back through the level with the stop at say 118.35. What if she doesn't rally? Okay, quick trajectory, come up, find support and push off. Yeah. Also, you can do it here. A few candles at 116.50, because you can see what happens. Poke, poke, come up, poke 3 times before we launch off. So if she doesn't rally up, I'd give it a little bit of room, come in through 116.40. Now, how far could we go to the downside? I haven't done the weekly chart here, but on the weekly chart, I've got a level of 110. Okay, obviously you've got to take out this double candle bottom first. Okay, which is at 114.50. But I think if we break down with the way the commercials are really selling hard, it'll be a bit like this. It'll be a big move. Okay, so straight through down to 110. So it's a trade that's shaping up, but like I say, you don't want to jump too soon. Okay, you want to wait for the confirmation. Yeah, the commercials are giving you the warning. They're not giving you the signal. But this, for long-term position traders, actually looks, I think, quite a good trade, actually. If we did get down to 110, obviously it's an if at this stage. It's quite a good number of pips. And I think you'll be catching an important turn. I just see this little rally up as a bit of a retracement of this fall. I don't see the euro getting back up to here. It could, but I just don't see it. Yeah, so for me, it's a good risk to reward trade. Just wait for confirmation of weakness. Yeah, stop loss protection. Yeah, basically keep it back. Yeah, from any level you think's important by at least 30 pips. Okay, so you never want to be right near a level of resistance or even a level of support. But I think, yeah, looks good trade, and yeah, commercials been pretty good in this pair over the last few years, in particular, and kept catching nice turning points. I think they're selling now indicates another one. So we'll see. Right, that is the video for today. Thanks very much for watching me as usual. Take care and have a good day.